What's up, YouTube? This is Thomas from Thomas Invest and thank you for watching. Today I want to talk about Kroger. This Friday they are going to announce their quarterly results, and in this video I want to show you my fundamental analysis to see if Kroger is a buy right now. Of course, these earnings could have a major impact on the fundamentals, and this analysis is before these earnings. If you're new to the channel, make sure to subscribe to get notified when I'm posting a video. I also appreciate an early thumbs up, which helps me within the YouTube algorithm. For now, let's dive into it. Kroger is the leading American grocer, with 2,700 supermarkets operating under several banners throughout the country. Around 82% of the stores have pharmacies, while over more than 50% also sells fuel. The company also operated more than 150 fine jewelry stores. Kroger features a leading private label offering and manufacturing around 30% of its own brand units and 40% of its grocery own label assortment itself in 35 food production plants nationwide. Now that we know a bit more about Kroger itself, it's time for some basic fundamentals. Kroger is a 34 billion market cap company with a PE ratio of 22.7, which is just a little bit above the 20 mark. This might indicate that the company is currently overvalued, but later in this video we will find out more. The 5-year PE ratio is at 16, which is great in my opinion. Gross profit and profit margin are very low, which is typical for this sector, so I don't bother that much. Look up some competitors and you will see pretty much the same numbers. Free cash flow is at 1.84 billion right now. The 5-year average is at 1.66 billion. Kroger uses 544 million to pay dividends. This means they have enough free cash flow to do so. Kroger pays a dividend at a 1.6 dividend yield right now. They have a return on invested capital of 5.5%, which is in line with the 5-year average of 5%. To be honest, this doesn't feel like a lot. The 52-week high is at almost $48 and the 52-week low is at $30. I think Kroger is a solid company based on these numbers. Let's find out more with the more advanced fundamental numbers. Since 2016, the revenue of Kroger increased more than 15%, so it's a jackpot. But in the recent years before last year, it's pretty much flat, and last year was of course influenced by the coronavirus. The profit grew by 31% since 2016, so this is also a jackpot. But this is something to consider. Can Kroger maintain profitable in the future, because we saw that the current profit margin is at 1.1%. Since 2016, Kroger is buying back shares, so this is of course a big jackpot. This is also something that I think I like the most about this company. With buying back shares, they create value for the investor. It's also great for dividends, because less shares outstanding means that Kroger doesn't need to pay dividends to those shares anymore. This supports dividend growth and maintaining. In this chart we see the current ratio of Kroger per quarter. When a company has more current assets than current liabilities, the current ratio will be above 1. I prefer a company where the current ratio is at least 1.5. We see that Kroger has a current ratio which is below 1, which also means this is a red X. This worries me a little bit, but it's also related to the sector. They need to have big inventories, and if you look up some competitors, you will see the same numbers. Since 2016, the free cash flow is up more than 500%, so this means a big checkmark again. But please notice the big jump last year, which is related to the coronavirus. The question is, can Kroger maintain this growth? To be honest, I don't think so. But they were growing at a nice pace before, so I don't worry about the free cash flow growth at all. It's very important that free cash flow is growing, because this is used to pay down debt, buy back shares, pay dividends, do acquisitions, and research and development. As always, I will give you 3 stock price targets. A low multiple of 15 for slow growing companies, a mid multiple of 20 for average growing companies, and a high multiple of 25 for fast growing companies. I think it's fair to assume that Kroger is a slow growing company. We won't see double-digit growth every year, and I think they are just below the average growing companies. But I want to add that the free cash flow is up big time in the recent years. So I don't think it's fair to use the free cash flow of the 5 years ago in the average. So I made a whole new calculation where I only used the free cash flow since 2019. This means that Kroger is undervalued by 19% right now based on these numbers, and has a fair value of $55 a share, so it's a jackpot. I think Kroger is a company that could perform very well from a value point of investing. But I also have to admit that with these kind of companies, it's very tricky with these margins. Based on the fundamentals, I think Kroger is a buy. They are undervalued in my opinion based on the free cash flow in the 2 most recent years, and with the share buyback program. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.